Welcome to Africa Insight. I'm joined this week by Jee-A van der Linde, our senior economist responsible for South Africa, who is going to give us some insights into Finance Minister Enoch Godongwana's medium-term budget policy statement, which was delivered yesterday. So, what were the key takeaways?
Thanks, Louw. So, the 2025 mid-year budget review, it was pretty much in line with our expectations. Treasury noted that tax revenues for the current financial period was better than expected. This was obviously broad-based and reflects what we've seen from the data throughout the year, which is, consumption driving economic growth and mining businesses benefiting from elevated precious metal prices. And, that has, of course, contributed to favorable terms of trade. Given the softer dollar environment, it just means that the rand and bond yields have had a stellar year so far. And so there was also downward revisions to debt servicing costs, largely because of these improved risk perceptions. And then, South Africa's exit from the grey list is boosting sentiment even further. So clearly a better picture. And then on the debt front, although the debt to GDP ratios are worse compared to the 2025 budget, Treasury continues to see debt stabilization, albeit at a higher level of 77.9% of GDP. So on balance, the finance minister generally had a positive story to tell. Lastly, I'd say, the big takeaway, of course, is government's new inflation target of 3% with a tolerance band of 1 percentage point. Interestingly, Treasury's revised inflation forecasts are less optimistic than that of the SARB, and they project the headline rate at 3.3% in 2027 and 3.2% in 2028. For reference, the SARB wants inflation at 3% by the end of 2027. Ultimately, I'd say, this move constrains the short-term fiscal outlook, but ultimately, government concluded that the long-term benefits of a lower inflation target outweighs the short-term cost. So I guess, we'll have to see how this inflation transition evolves and if and how much, GNU partners buy into this new inflation environment. Louw.
Yeah, and so I think that we certainly weren't expecting fireworks at yesterday's mini-budget, and President Cyril Ramaphosa was very careful convening a GNU retreat on November 2nd and 3rd to bring GNU party leaders together, also to have them briefed by Mr. Godongwana so that they knew exactly what his spending priorities were going to be, to avoid a repeat of the chaos that we saw during the budget debates earlier in the year. It was very important for Ramaphosa to not have a repeat of that, to boost sentiment and bring back confidence in the GNU. And so yesterday was very carefully stage managed, of course, but it proved to be a fairly good set piece. I might point out, as we had discussed earlier, that earlier this year, we saw a GNU all singing from the same hymn sheet and smiling and looking very happy when Mr. Ramaphosa delivered his State of the Nation address. And 2 weeks later, the wheels came off when the budget was supposed to be presented. So we don't want to get too carried away by pretending that GNU is in perfect health, but the signs are encouraging. And yesterday did a lot to perhaps boost this impression that GNU, everyone's pulling in the same direction. And I think we'll leave it at that. Thank you for joining Africa Insight this week. If you'd like more information on our products or services, please visit our website or socials.